There's signs of a rescue when it comes to stocks, particularly when it comes to the A-share market. Should we expect the national team to step in more in a meaningful way?
We are continuously expecting more stimulus measures of such kinds, but I think the market is expecting more concrete actions, and because overall sentiment remains very cautious, right now investor positioning and expectation remain quite low. So I guess right now market and investors are still grappling with the weak economic recovery and also the property downturn. So more concrete and consistent or coordinated effort will definitely help.
And it's good to, as David mentioned, right? They're in some ways doing a lot of measures, except for shutting down this market in some ways. Given some of these curbs, though, does it actually deter people from coming back into this market, because it makes it harder for them to exit out of these positions too?
Right now, I guess market is just looking for clearer signals.
Yeah.
First of all, about economic recovery, which right now is a bit murky given how we're in a blackout period. For January, we'll only get the inflation data and also the credit data.
Yeah.
And we will not get the market data with regards to like retail sales, etc., or more sense of like how the sentiment is heading towards until mid-March. And so I guess the next catalyst will definitely be on the MPC meeting and see whether there will be more measures coming out. But I guess market is waiting for more concrete measures or coordinated policy responses. And so targeting key sectors like property and also on the consumer sectors.
Marcella, David here. So I don't know, just to sum things up, I don't know if this is a dumb question, how low is too low? And until we figure out what metric to use to determine that, do we just stay clear of most Chinese exposure at this point in time, or does this market present value now?
We believe right now, given how investor position is quite low and expectation is quite low, and also the undemanding valuations, there should be continuously upside surprises, hopefully in the next 1 to 2 years. And as we've always mentioned, given the current low undemanding price-to-book ratio, we see that in the next 24 months or so, will usually yield quite decent positive double-digit return. So this is what we're expecting. And right now we see actually the earnings momentum have been improving. We see earnings upgrades in specific sectors like internet, consumer staples, and energy, etc. And also we continue to see, for example, China banks might be considered as shelter sectors right now, as we see stable dividend payout, as well as actually quite decent performance compared to MSCI China. We've seen year-to-date plus 10% return so far. And obviously we continue to monitor like catalysts like stimulus measures, property stabilization, and also whether there will be more concrete measures going forward at the MPC.